Welcome to the latest Motley Fool scoreboard. I'm on in Chockable, and we've got longtime fools Toby Bordelon and Lou Whiteman giving a 1 to 10 rating. To the Orkin man, it's Rollins, ticker symbol ROL. Talk about business first, including factors like industry and competition. 10 is invincible, a 1 is hopeless. Both of you have 9s, Lou.
Yeah, so not a business you think of every day, but not one you'd want to live without either. Let's be honest. Rollins is a pest control giant. Great stock under the radar. It's a market beater, over the last, 5-10 years, whatever time frame you look like. It's the first name in pest control. Operating as Orkin, a whole wide range of other brands. It's a consolidation story, a recurring revenue story. In theory, a lot of competitors, and yeah, there's a lot of options out there, but yet they continue to show steady pricing power and the ability to grow. Just a really, really solid stealth, but a really solid overachiever over a significant period of time.
Yeah, I was honestly a little bit surprised. I threw a 9 out here, but as Lou noted, they've beaten the market S&P 500 over any time frame you want to look at. Year to date, the past year, 3 years, 5 years, 10 years. That consistent market beating performance, I think it's worth a high score, unless you have some compelling reason to suggest it's not going to continue. Brands are strong here. About a 20% market share in the commercial pest control market, or some of the estimates I'm seeing for them. That's high for a fragmented market. So pretty solid there. They've traditionally grown by acquisition, as Lou noted. This is a roll-up operator here. But last fiscal year, organic growth was 7.9%, with acquisition-related growth accounting for 3.1%. Not bad for a company with a growth by acquisition reputation. So lots to like here.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. You all agree and agree high again, Lou, at 8.
So I really like consolidation stories when they work, and there is a lot of risk with buying a lot of companies. But in a good year, Rollins makes 30 to 40 acquisitions, guys. There's a ton of risk, yes, but a ton of opportunity if you do it well. And look at this track record. They know what they're doing. Management has shown itself to be very good at swallowing up companies and using that as fuel for growth. CEO Jerry Gadolf is relatively new to the role, but he's been with Rollins for decades. This is a business that relies on its culture, relies on its playbook to keep the model intact and keep the momentum going. I hate to think of it as a perpetual motion machine, but it just really feels like they have the components in place, and management deserves a lot of credit for that.
Yeah, I think when you do have a company that kind of looks like a perpetual motion machine, as Lou said, you want consistency. You can want consistency in leadership, and promoting from within is the way to go when everything has been working right. That's what they're doing. CEO only around for a couple of years, but 25 years with the company, including as president and COO, right? So he was chief operating officer while everything was going really well. There's a lot to like there. Former CEO who served for about 20 years in the role, Gary Rollins, son of one of the co-founders. He's still around as executive chairman emeritus. Right now, he's not doing much, but he's still around, a resource to look at there. Management has been very good at making efficient strategic acquisitions here while keeping organic growth at a good level. Can our new CEO deliver the same level of results that Mr. Rollins did? We'll see. But I think, indications are yes, right? And so until those indications change, you kind of like what you're seeing here.
For financials, a 10 is a fortress, a 1 is yikes. The agreement continues with 8s, Lou.
So 10% growth in the most recent quarter, and about 7.5% of that is organic. Important to see in these stories, like Toby said, they aren't just buying growth. They're able to generate it from what they own, which really, that's what you need to see. 50% plus gross margin, too. They raised prices 3 to 4% just not too long ago. Claim to have seen no significant churn. Love just the idea of something that is a company able to do that. I think this is a cash generation machine that is humming along as advertised, which, that's what we're looking for here. Maybe knock them down a point or two, because consolidators do come with risk, but it's hard to nitpick here. It's a really, really good story.
Yeah, debt levels are good, just under $500 million versus $200 million in cash. Revenue growing very nicely. Bottom line profitability is improving. Cash flow is positive. You got a nice dividend with that for shareholders. It all looks good. I don't really have much more to add to what Lou said either.
Then let's talk valuation, Toby. How well will Rollins' stock do over the next 5 years? How safe is it? 10's a sure thing. 1's a lottery ticket.
I'm going to go 10 to 15% here. As we noted up top, this company has consistently beaten the market over time. I don't see how that would change or why that would change. I expect that could continue. Now, it's not going to be a dramatic market beater, but I think it will be a market beater over time here. And safety score, maybe 7. I'm knocking them down a little bit over some slight valuation concerns. It's a great business, but you could arguably say it's a little bit richly priced for what they are. But again, when you have consistent market-beating returns, maybe that's justified.
Yeah. I mean, a lot more agreement here again, too. I'd note with the dividend, this is a total return story. So that helps with my 10 to 50% number. But really, like Toby said, all I'm doing here is predicting that a company with a good formula for growth that has a solid track record over decades of beating the market will continue to beat the market, which that makes sense to me. I don't think it's a bold prediction. Safety, I'm at a 6 just because as you grow, you do need to sort of maybe think of bigger deals or more consolidation or ways to do that. Between that and valuation, I don't think it's a no-brainer to beat the market, but I'm not going to worry too much about this one either. So a 6.
Time for everyone's favorite topic. Toby, is there a company in Rollins' space you like more?
Not really, quite honestly. If you're going to invest in a pest control company, I think this is the one to do it. I'm just not sure where else you would look. Ecolab, I think, is worth considering if you want to add some broader diversification to your pest control services here. With that one, you get some water and energy services that are kind of interesting. Now, the problem there is they've consistently underperformed the market over the past decade. So there's that, right? I'd rather go with an outperformer than an underperformer.
Yeah, agreed. If for pest control, this is the company to buy. So let's have some fun. I will get a top it or an alternative to Ecolab. How's that sound, Toby? This is again, very volatile stock, very tough, and a lot of risk here, but high risk, high reward. A company called Montrose Environmental, MEG, does a lot of environmental monitoring remediation. They do some things with just kind of, it's in the same sort of sector. But yeah, if you're doing pest control, you got to go with the Orkin, man.
Thank you to both Lou and to Toby. They've given Rollins a strong overall score of 7.8 out of 10, just knocking on that 8 that would compel me to buy. Surprisingly, it was the mediocre safety score for this seemingly boring company that took it just a tick under that 8. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Gilead Sciences. Till then, Fool on.
You know what's fascinating about this? And I feel like that this is like a behavioral econ 101. Like the safety score is down because both Toby and I are saying, I don't believe my eyes.